Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Digital asset security is undergoing a dramatic recalibration. DeFi protocol losses have plummeted 80% year-over-year, settling at $534 million in 2024. This marks a stark departure from the catastrophic peaks of 2022. The primary driver is the decline in bridge hacks, which previously served as the industry's most vulnerable entry point. However, this stability is fragile. New multi-chain risks are emerging for investors who assume the threat landscape has vanished. The architecture is changing, but the danger remains. Meanwhile, geopolitical tensions in the Middle East are reshaping global energy flows. Iraq and Turkey are currently negotiating a new energy pact. Their existing oil treaty expires on July 27, 2026. This deadline looms large as disruptions in the Strait of Hormuz slash exports to 10 million barrels. The uncertainty surrounding this expiration is adding a premium to regional stability. Investors are watching closely to see if a new agreement can stabilize supply chains or if the vacuum will trigger further volatility. On the macro front, Canada presents a conflicting economic picture. Q1 GDP flatlined, technically signaling a recession. Yet, May added 88,000 jobs. StatCan data and analysis from the CD Howe Institute suggest this technical recession label is misleading. The labor market remains robust despite stagnant output. This divergence challenges the narrative of an imminent economic collapse in North America. It suggests underlying resilience that standard indicators might miss. In related news, Wall Street is testing its appetite for new equity. A surge of AI-linked stock offerings is underway. Major players including SpaceX, Anthropic, and OpenAI are aiming to deliver trillions in new equity. This wave tests investor demand amid shifting market dynamics. The success of these IPOs will signal whether capital is still flowing aggressively into the artificial intelligence sector or if fatigue is setting in. Corporate credit continues to defy these geopolitical shocks. SocGen strategist Juan Esteban Valencia notes that investment-grade spreads are holding steady at 92 basis points. This stability persists despite ongoing tensions in the Middle East. It signals resilient corporate debt demand. Lenders are not yet pricing in significant risk premiums for creditworthy borrowers. The market is pricing in stability, not chaos. Looking ahead, the economic calendar remains quiet. There are no major releases in the next 36 hours that typically move markets. This absence of data allows current trends to dominate sentiment. Investors are left to parse the structural shifts in crypto security, energy treaties, and corporate credit rather than reacting to sudden macro surprises. The focus is on long-term structural changes rather than short-term data points. That's your market briefing. Follow Rumour with AI for daily market intelligence.